This oil story, Amrita, is we're starting to understand it a little bit more, and we're starting to see, even though Europe hasn't banned exports, de facto, you're starting to see some real effects from all the various sanctions. And 114 seems cheap, almost, for oil. Do you expect it's going higher based on dynamic supply-demand dynamics now?
Yeah, look, I mean, it is going to head higher. I think the question is on timing, right? Right now, more than the Russian fundamentals or sanctions on Russia and the oil market fundamentals, the issue is the lack of liquidity. And I'm sure you've seen loads of headlines around that. You know, trading companies really struggling for cash flow because margins from exchanges has gone up so much. Capital is getting tied up because both of high flat price and volatility. And honestly, that's the only reason why we aren't even higher. And the other reason why we aren't higher is because China is still battling COVID and isn't out in the market buying more. Otherwise, we would be substantially higher. But you're exactly right. Looking into the summer, I mean, we are genuinely talking about the requirement for rationing on demand, whether it's government-induced or just through high prices, because there's just not going to be enough supplies around.
We've had you on in the past, and you really do have your finger on the pulse of everything that's happening. So there are spare parts that are needed that could be covered by these sanctions that Russia can't get its hands on. So they've got some aging reserves, and that needs to be, like anywhere else, needs to be maintained to keep it operating. And that's slowly they're not able to do that. And pipelines as well. Pipelines, they can't get spare parts for pipelines. So how long before this becomes what you would actually call critical for Russia to be able to export?
So I think, there's two different things over here, right? Like one of the issues you've talked about, spare parts, that actually impacts the Kazakhstan oil that actually flows through Russia. It's called CPC. I'm sure you've seen yesterday. That's pretty much halted right now. Now, there's bad weather there all the time, but there has been damage to a couple of the berths that are used for loading. Now, that's where the spare parts, because while it is Kazakhstan oil, which is not sanctioned, because the port is in Russia, that could easily get delayed, even though it should only take a few days or weeks to repair it. On the Russian side, they are saying, look, it could take a couple of months because we can't get the parts and so on. Look, there is obviously a political dimension to it. I do think from Russia's point of view, if they are struggling to sell their oil, they are going to make it very difficult for anybody else to sell their oil as well. So there's definitely that. But yes, that's where the spare parts come in. But with regards to the longer term, right, whether it's just equipment to keep production growing or just stagnant, that is going to play out over the coming months and years, really. If these sanctions don't get lifted, yes, there are going to be Chinese and Indian companies that step in. So we shouldn't expect it to, just fall off a cliff. It's not going to be the same as, say, a Schlumberger and Baker Hughes being able to use their technology. And I think that's where we could actually lose a pretty significant source of medium-term supply growth, which was going to be Russia, from our balances at, let's say, 1.5 to 2 million barrels per day for a few years, not just in the short term.